If I may introduce myself, I'm Martin Wolf from the Financial Times. It's my great pleasure to moderate, or as I often refer to it, immoderate this session. As I'm sure you'll appreciate, for a journalist, the position I'm in today, being able to ask questions which these immensely distinguished people really have to answer in front of all of you, is something like being in heaven. Before I start, let me just introduce our panelists, very, very distinguished people. First, Wolfgang Clement, who is the Federal Minister of Economics and Labour of Germany, and of course has just put through some very interesting reforms, which I'm sure we'll be discussing. Second, Monsieur Francis Maire, who's the Minister of Economy, Finance and Industry of France. So old Europe is very well represented. Monsieur Trichet, Jean-Claude Trichet, who has recently taken over as President of the European Central Bank, the world's second most important central bank. Then representing Japan today, since Minister Takenaka had to stay behind because of the meeting of the Diet, is an old friend of mine, a very, very distinguished policymaker, Mr. Haruhiko Kuroda, former Vice Minister at the Ministry of Finance and now Economic Advisor to the Prime Minister. I wish you luck. And then we have as representing the business sector, Mr. John Chambers, who's President and CEO of Cisco, is that correct? And I think anybody here who doesn't know what Cisco is probably in the wrong place. And finally, we have as challenger, I can simply say quite safely, having got to know him over the years, there is no man on earth better suited to be challenger at this session than the man we have, Joseph Stiglitz, Nobel laureate, provocateur. I won't say agent provocateur, provocateur formidable. Okay, now let me just introduce briefly where I think we are in the context for our discussion. I think there is a general consensus we are now in a genuine global recovery. It's being led by US demand and followed very strongly by Asia, particularly and noticeably China and India. But there are also some things that really worry people. And it's very, very good that a lot of the things people worry about are actually very well represented here in this panel. We have the re-emergence of a genuine twin deficit problem in the US with an absolutely enormous fiscal deficit. And what Mr. Cheney said was slightly economical with the truth on the scale of the fiscal deficit in the US at the moment, and its shift from surplus to deficit is unprecedented. We have a falling dollar, which suggests that the world does not wish to finance the current account deficit of the US as it's now grown to about 5% of GDP, and this is inevitably creating a major adjustment shock for other economies, particularly the Eurozone and Japan, because demand growth in both, and particularly in the Eurozone, has been so remarkably weak. Just to give you an indication, in the Eurozone, over the last 3 years, final domestic demand has grown by 1.1%, 0.4%, and 1.2% respectively. And this is the context in which the Eurozone will have to adjust to this rising euro and weakening exports. The yen, of course, creates similar problems for Japan. There are concerns about overheating in China, and there are genuine concerns about rising protectionist pressures and the Doha round. In this context, I think it is particularly valuable and appropriate that we have three very distinguished representatives of the European economy, because much is expected from Europe, much is needed of Europe, but we obviously have to admit that in the last 3 years, economic performance has been desperately disappointing. To give you again the sequence of growth rates, very roughly, GDP growth in the Eurozone was 1.7% in 2001, 0.9% in 2002, and not much above zero last year. There has been, I think many critics would feel, a very weak macroeconomic policy response. In fact, the fiscal response and the monetary response have been quite modest, certainly by US standards. Nonetheless, even though it has been quite modest, there's been this huge row over the Growth and Stability Pact between the countries represented here and the Commission. There is even deeper concern about underlying structural rigidities, which are shown both in very high unemployment rates and very slow declines in inflation in response to very, very low growth, a big concern of the ECB. And it has become remarkably difficult to bring through really radical reforms, as I'm sure Mr. Clement knows better than almost anybody. I used to remark, and I think I would still remark, that when the EU said confidently at Lisbon that it was going to be the most competitive economy in the world by 2010, it showed, if nothing else, that the EU had a sense of humour. So these are the questions I think that genuinely are in the minds of this audience. I put it brutally because I think people here are genuinely anxious about what's happening to Europe. After a period of real optimism in 1999-2000, the creation of the euro, what on earth has gone wrong and what are we doing to put it right? I think this is the right question to ask. And so this is the question that I am essentially posing to the three first speakers, and I would like to start with Mr. Clement on how you see the response of the Eurozone to its real difficulties, and above all, of course, the response of the Eurozone's incomparably most important economy, Germany, which has, of course, performed particularly badly. Mr. Clement.
Yes, some minutes ago I heard Professor Schwab saying this year this is an atmosphere of hope here in Davos. And that is a reason why I came to Davos, to bring some hope back to Germany. But I should say there are some signs of hope in Germany too, and I would like to say how we have to react on this global and situation, and of the situation in Germany especially. Every one of you knows in Germany we must strengthen the potential for economic growth, and I think that this will be on the top of the political agenda for the next years. The key to more economic growth is to strengthen employment in Germany and to boost productivity through more investment in education, more investment in qualification, more investment in research and development. And to achieve these goals, Germany has launched, I think we can say, a historically unique reform agenda during the last year. We speak about significant income tax cuts. We speak about structural reforms. Not we speak about it, but we solved it. We brought on the way some structural reforms in the pension system, the health system, the labor markets, and so on. I think you want to know this in the details, but these reforms are a first step in liberating the labor market from structural rigidities and make it more flexible. We will continue these reforms in Germany on the goods, on the services, on the capital markets. We have to cut the unnecessary bureaucracy. We have to continue the budget consolidation, and we have to increase spending on future-oriented areas like I said, education, research and development. That is the program, and I think a third of this program we have brought on the way in Germany on December last year, and this year we will continue on this way. And we will continue to bring power to the innovation in Germany. These reforms on the labor and the capital markets and in the social security systems, I think they will boost the confidence of the markets already in the short time. And we are not sure, but we hope that this will bring Germany again in the role of a driving force for growth in Europe in the medium term. That is our goal, and that is the way we want to reach this goal. On this way, we have some problems. You know, we have some problems with the European Commission. But let me say it in a short. We think we are convinced that the decision of the ECOFIN in the deficit procedure against Germany is compatible with the Treaty and Stability and Growth Pact. That is our opinion. We can discuss it. I think we should discuss it. But you must see Germany has committed itself to very strict conditions in this ECOFIN decision. The deficit limit must be complied with again by 2005 at the latest. And we are convinced that we will reach it. It will take some power, but we will reach it, and I think we will be in Übereinstimmung with the Treaty Pact. That's it.
That's it. Good. Wonderfully to time, and plenty of questions left open. Monsieur Maire, you've heard how Germany is tackling its problems and engaged in serious reforms. France also has not obviously done as well as you would have hoped a few years ago, and last year seems to have been particularly poor. How do you see the position from France's point of view, your own reform efforts, and the probability that the Eurozone will in fact put together the changes, macro and micro, needed to generate really rapid growth again?
I cannot deny that the figures for the last years are disappointing in Europe. But it is not, in my mind, a reason to develop European bashing. First, Vice President Cheney was right when he remembered us half an hour ago that the origin of democracy was in Europe, and that due to the reconciliation between Germany and France, we created the condition of the Europe we are speaking today. And I should need to underline that even if it is 60 years ago, you need to understand that this Europe has also his past story with him, cannot deny his past story, cannot forget his different cultures, even if the maximum amount of common values is increasing. After having said that, I should say that the opinion you might have of a quiet Europe as far as the reforms necessary to be involved is wrong. I'm quite impressed when I discuss with my colleagues around some tables in Brussels or in bilateral discussions that we face in Europe more or less the same problems, whatever the countries are, with degree of extension which are variable, but the problems are the same, the solutions are the same, the calendar is not exactly the same, the methods are not exactly the same, but the target is agreed and it is the same. That's to say, everybody, maybe with some delay vis-à-vis other countries, has understood that our duty as administration, largely speaking, is to enter in a decisive program of reforms covering a lot of subjects, and you know the subjects. And these reforms, once they are implemented, will create in Europe, like in other countries, the necessary conditions for private initiative to be more effective and so to create more growth. I've been very personally impressed, for example, by the German evolution. 1 year ago, I'm not sure that my dear friend Clement could have exactly stated the same things than today. Because in my mind, at least, the German administration has significantly changed and reoriented its strategy, economic strategy, this year, starting at the beginning of last year, in the direction Mr. Clement has explained to us. Second, when you read or discover the press release or the article written by Bundeskanzler Schröder at the end of last year, speaking basically of innovation, of entrepreneurship and so on, my reaction has been fantastic. I should have signed this paper. This implies that presently, not only in France and Germany, but also in all the other European countries. Everybody at the administration level is in line with the others, and we are presently developing with all the European constraints you know or you may know, we are developing the same agenda of reforms, and at the end of this agenda, Mr. Wolf, I hope that the European sense of humor will be less contested than it has been positively by you, because I must confess that when I discovered the wording of Lisbon, I was unable to refrain a huge smile, personally. And I must also say, because I think it's better to be simple, that this purpose, these declarations, as long as they are not appropriated by the people, that's to say by the corporation in that case, and by the unions, have not the slightest interest. And our problem in our countries and in Europe is presently to explain and to convince the people that the reforms we have entered in are the key necessary to be used in order to open the door for future and stronger growth. And I must confess candidly that I think that they start and understand.
Thank you very much. Monsieur Trichet, you've just heard from the ministers representing well over half of the economy for which you are responsible. And they basically said the agenda of reform is seriously underway, and we can be confident, therefore, that the performance of the Eurozone will improve, as this is a consensus across Europe. So my first question to you is, do you believe any of that?
First of all,
the second question to you is, there's a second question, well, I could ask them, both together, because I have no doubt you can remember them both, which is, many people feel that even accepting all the structural rigidities and problems, the ECB really has reacted too slowly compared with the Fed, to support demand, and particularly in light now of the soaring euro, that you've been much too complacent. So I'd like you to address that question. I know we are all concerned about the euro, but is the ECB really beginning to do enough about it?
Well, on the first question, I would say that we have a tendency to underestimate the deal of structural reforms which are underway in Europe, in my opinion. Not in France or in Germany, in the full body of Europe, not only in the Eurozone, in the full body of European Union. The single market endeavor was an extraordinarily bold adventure, and I have to re-mention that in some respect, and particularly as far as financial services were concerned, we were in advance of the single domestic market in the US. You remember, at the time in the US, there was a strict separation between states in the United States of America. So let's not forget that we launched years ago a very, very powerful train of reform. They are underway. It has materialized in a number of areas. It still has to materialize in others, but it is underway. The single currency itself was a major, absolutely major structural reform, and it had triggered an additional set of restructuring and reshaping in the manufacturing goods, in the service industry, in the financial services industry, that would have been totally unthinkable without the single market with the single currency. That is underway. Let's not forget about it. We have a tendency, perhaps in Europe, to see everything through very pessimistic and gloomy grid. We are over-exaggerating our gloom. Perhaps in the US, there is I would say, enshrined optimism in the culture. And from time to time, I would like the European culture to capture a little bit of this US optimism, which would perhaps permit us to have a little bit more confidence in what we are doing. That being said, the glass is half full, as I said. It's also half empty. We have a lot of homework to do, a lot of homework to do. What is reassuring is that we have a consensus on the agenda. And I was struck by the fact that the Minister Clement and Minister Mayer, but I would say all other Ministers of Finance of Europe would have said, in my opinion, the same. So there is a diagnosis, and we crystallized the diagnosis in the Lisbon Agenda, which was underwritten by all executive branches in Europe. And of course, the ECB backed very, very forthcomingly the Lisbon Agenda. The problem is not the diagnosis, the problem is the delivery procedure, and there we have undoubtedly progress to make. The new presidency, the Irish presidency, seems to consider that perhaps the first priority would be to pay as much attention as possible on the decision-making, surveillance and delivery procedure of the Lisbon Agenda. We are backing totally that. And I have to say that the ECB was public, the Governing Council of the ECB was public on the fact that we would back governments, parliaments, and social partners that would embark boldly in these structural reforms. We know that they are not easy. We know that they have a lot of costs associated. And we know, as Minister Clement and Mr. Mayor said, that the problem is very largely and powerfully the pedagogy which has to be exerted on the general public for the public to understand that everybody would be better off if we would materialize those reforms, which has still to be explained, I would say, with as much efficiency as possible. On the second question, I don't want to embark too much on, I would say, technical explanation, but let me remind Martin that when we started the euro, 1st January 1999, we had promised all people of Europe that the new currency, in terms of credibility and in terms of low, medium, and long-term market rates, would be at least as good as the previous currencies. This is a promise which was made. And it's on the basis of this promise that the people of Europe decided to embark into the new currency. That was a very bold promise, because there were areas in Europe where you had a lot of credibility and yield curves that were very low in terms of nominal market interest rates, medium and long term. There were other areas, other economies, other countries where they were much, much higher. And it was not to be taken for granted that we would have the best yield curve available in the full body of the Eurozone. I have to say that, on the contrary, markets in 97 or even the beginning of 98 wouldn't trust that. They thought that we would have the weighted average of market interest rates in the Eurozone. We explained that it would be a mistake, that they were mistaken what we were doing, that we were benchmarking the euro on the best credibility possible, namely the lowest market rates, medium and long term possible. We convince markets, we convince everybody, investors, savers, the people of Europe, the global savers, and the fact is that we delivered. And we have today an environment, a financial environment, which is historically exceptionally favorable in terms of historical records. And I have to say, which was not thinkable by markets in 97. So I don't want to stress too much that, but you have to understand that this is part of our responsibility to be up, of course, to this level of credibility, which is arithmetically underwritten by markets. That being said, we trust that the 18 members of the Governing Council took the right decision at the right moment. And of course, we are living in democracies that are very vivid. It's normal to be criticized, and we have to respond and explain. I will only mention that one of the chief economists of a very, very important bank, I don't want to mention any commercial bank right now, but think that we've been a little bit more accommodating than other big central banks in the world when you introduce comparison according to the Taylor rule. So this criticism you mentioned is debatable, and I'm available, of course, to discuss that.
Not only is it debatable, I think it will be debated. I turn now to Japan. When I was challenger here last year, I said, and somebody reminded me of this because I'd forgotten, that the role in Japan in discussions of this kind was to make the Eurozone look good. And it has failed, because in fact Japan had a very creditable performance last year. Growth was, I think, about 2.7% in 2003. But of course, as we all know, this is the third recovery since the bubble burst. So the question, Mr. Kuroda, is this third time lucky?
Yes, as you just mentioned, after a sharp downturn in 2001, the Japanese economy has recovered, growing by around 2.5% from the second quarter of 2002. That means that the economy has been growing in 6 consecutive quarters. And I think this trend will continue this year and hopefully after this year. The proximate causes of the recovery are the increase, very strong increase in exports, particularly to China, and the strong business fixed investment based on the improved corporate profit situation. Again, as you mentioned, this is the third recovery phase after the bursting of the bubble in the early 90s. This recovery differs from the 2 early recoveries in the sense that it is not supported by unsustainable fiscal expansion, but rather it was brought about by substantial restructuring and innovation in the manufacturing sector. For instance, if you look at the numbers of M&As in the last few years, numbers more than doubled. Also, among manufacturing sectors, automobile, electronics, and other industries have been making substantial innovations in technological sense as well as in management sense. So this recovery may be much more robust and sustainable than the 2 prior ones. However, whether this recovery is really sustainable will still depend on the resolution of 2 problems, 2 interconnected problems, persistent deflation and non-performing loans in the banking sector. Deflation is persisting, although the consumer price index has been almost flat in the last several months. The GDP deflator is still declining by about 2% per annum. Non-performing loans certainly decreased significantly in the last couple of years, and the goal to halve the non-performing loan ratios at major banks by March 2005 will be met if deflation is contained. In this context, I think the role of monetary policy is of paramount importance, since persistent deflation can only be cured, if at all, by monetary expansion. With the 0 interest rate, the scope of traditional monetary policy is, of course, severely limited. But still, some non-traditional measures such as inflation targeting and or accelerated purchase of domestic financial assets would have some impact on price levels. One major uncertainty for the Japanese economy is the dollar-yen exchange rate. The dollar has already depreciated against the yen by about 20% in the last 2 years. And it declined particularly rapidly in the last several months. In view of the consistently higher growth, faster growth, and higher rate of return in the United States than in Japan, such a large depreciation against the yen is difficult to justify. But focusing on the twin deficit, the exchange market has been depreciating the dollar excessively. The appreciation of the yen tends to reduce export and affect the growth rate in due course, but much more serious is its negative impact on corporate profit and deflation, which can be immediate and profound. So the Japanese authorities have been intervening in the exchange market, and the latest decision by the Bank of Japan to further increase monetary base would make intervention more effective and is most welcome. So all in all, I must say that I'm relatively optimistic this time about the growth prospect in Japan, but we still have some uncertainties, including deflation and appreciation.
Thank you very much. I'm very struck and very much sympathize with your emphasis of the exchange rate movement, but I'm struck particularly with the contrast between that and what the three previous speakers said, or rather didn't say, on the subject. And that's a point I think we will have to return to. I now turn to John Chambers. I think you have the misfortune to have shared 3 panels. There's a third panel in successive years we've participated in. Commiserations. The question I would like to ask you, John, is, well, actually there are 2. The first is, from your perspective, American businessman, but running a global company. First, how do you see the U.S. recovery? Do you feel, from how you see it, that this is strong, robust, vigorous, sustainable? And second, how do you respond to some extent to what has been said before? Here we have the Eurozone and Japan between them are a pretty large chunk of the world economy, must be getting on for 40%, I don't know the exact figures. Mm-hmm. You do business in these places. Do you think they are seriously ready for business? Are they reforming in a way that is attractive to you or not?
I'm going to come at it entirely from a business perspective, as your comments indicated, Martin. My comments today should not be interpreted about Cisco's business. My quarter ends tonight. So if I'm in a good mood, it's because this is what I've heard at Davos, and don't interpret any of these in terms of Cisco's current momentum. But I'm the optimist this year, and 3 years ago at the session I was not. I felt we were headed into a very tough time period 3 years ago, 100-year flood. And the reason that I'm the optimist is, first and most important, in listening to business customers around the world, there is uniform, cautious optimism. Not abnormal risk-taking, but cautious optimism. And at this panel last year, Martin, the point was made several times that the reason many business people around the world were optimistic, but especially in the U.S., was they were optimistic about what was being in place for productivity. And they felt productivity would be what drives the U.S. out of this economic slowdown. There is a 1-to-1 correlation between GDP growth and productivity growth. Actually 0.99 according to the data we've been using in the U.S. as an example. And there's a 90.98 correlation between percentage of capital investment going into your economy and productivity growth. I believed, and I said it at this time last year and said it 4 years ago, you should drive your economies at 2 to 3% productivity growth in all major economies around the world should be an achievable goal. And 3 to 5% was not out of question. But even in the U.S., almost all the economists 4 to 5 years ago would have said that was impossible. And I believe it is very sustainable. I believe it is sustainable for a combination of reasons. First is we get to see what is going into IT investments in almost every major company and country around the world. Our business is roughly in proportion to the economies around the world. So 30% in Europe, 45% in the U.S., 10% in Japan, 12% in Asia Pacific, with China and India obviously being the fastest growing segments. What we see is wave after wave of applications that drive productivity. We see it going through in what Mr. Greenspan referred to, latency effect of investment. I would actually word it, it goes in 3-year cycles. You make the investment, you get a certain amount of productivity the first 3 years, you evolve the process, your productivity increases the next 3, you evolve it again, and it goes the next 3 after that. That is going through almost every application we've seen applied. We also see it going by different industries at different paces. And when you think about it, the McKinsey report that talked about this was right in that high tech, retail, finance would be the first ones to drive productivity. But the reason for that was very simple. Their employees understood it, their suppliers understood it, and their customers understood it. So you'll actually see this go through every industry at a different pace based upon where those companies are or where a breakaway leader like a Walmart starts to break away or a Metro AG. We also see an understanding of it isn't about an IT investment alone. You've got to change the process first, then make the investment. So if you use the example of what I was talking about in customer service as an example, 300 companies studied, average productivity increase of these 300 companies studied in customer service with IT investments was 25%. If you change the process first and then made the IT investment. If you made the investment and then thought about changing the process afterwards, your productivity actually went down. That's the understanding that business leaders are getting around the world, where they look at their future of their business saying, IT will enable my business strategy. And it is that optimism that we're beginning to see go around the world in terms of its implementation. So if you use the U.S. as an example, I believe that 3 to 5% productivity increases is sustainable for the entire decade. I believe you can grow GDP 1 to 2 points above productivity increases. And so I'm optimistic about the U.S. economy for this decade. Now that has huge implications on other areas such as inflation and interest rates. It keeps interest rates down, it keeps inflation down dramatically, and we haven't learned how to put that into our economic equations yet, I don't think. I'm a little bit more optimistic than maybe some people might think about Europe. Not Cisco, but the high-tech industry as a whole has seen a very steady increase across Europe, more in Eastern Europe perhaps than the larger countries in the West, but it's been very steady across the board for the last year. And when you talk to the business leaders, they're beginning to focus on new business models. And it's way beyond outsourcing. It's core versus context. You do what is your sustainable competitive advantage. You get your partners to do what they do better. And you tie it together through systems and networking to really get your leverage. That whole business model will continue throughout this decade into the next decade. So you have a fundamental change really driving the economy on a global basis. Japan, you could feel it turn last summer. And the business leaders began to pick up optimism. The government leaders did, and you could see it in the summer well before the numbers came out. But also the consumption of IT for almost all IT companies around the world increased in Japan faster than they would see in other sections. So in summary, what I am seeing is cautious optimism. You can almost predict, in my opinion, you all understand more about fiscal policy than I ever have a chance to learn. But in terms of IT investment, business attitude, how they view productivity, you can almost track where the IT investment is going. You can see where productivity is occurring by industry or by country, and you can predict GDP growth. And I see that pretty uniform around the world. Actually, I see the European business leaders willing to take more risk than their American colleagues. The American colleagues are more optimistic about the business, but there's a caution there I've never seen during my business career before. And that's why you're seeing the American economy in terms of capital investment, IT spending, actually grow slower than the other countries around the world. Now that latency effect of investments that were made during the latter part of the 90s and early 2000s is still carrying through, and the process change is carrying through. So that's really how I see it today. I'm pretty optimistic on the total basis. The jobs and the company will go wherever the best infrastructure is, with the right education system, with a supportive government.
Thank you very much. Well, after that, I think it's very appropriate that the last speaker is such a distinguished representative of the dismal profession. So how else will we get any balance? So, Joe, it's up to you now.
Okay. Well, normally, actually, I am optimist, but I share John's view. I am a techno-optimist, but I think I am a macro-pessimist. And the point is that in the last couple of years, it's not like technology stopped. It's not like the structural reforms. In fact, we've had a lot of structural optimism. The structural reforms have been going on, but the weakness in Europe and in the global economy is in spite of the structural reforms. And I think the underlying source of the problem is an unprecedented level of bad macro policy around the world. It's a happy conjunction of both Europe and the United States being badly managed. Now, I'm putting it a little strong, but you asked me to be a little provocative. On the area of Europe, I think on the fiscal side, there's a very peculiar position I'm in here, because I think Europe has been much too fiscally constrained, and America is much too little fiscally constrained. Every standard macroeconomics textbook, and I certainly don't want to revise, there are a couple people in the audience here who have written them, I've written, and we certainly don't want to revise our books, says that when you're in economic downturn, you're supposed to stimulate the economy and have deficits. That's right, and the focus that's been expressed here of trying to get their deficits down seems to me misplaced. You want to have a focus on your structural deficit, not your actual deficit, and there ought to be more expansionary fiscal policy. The United States, under the Clinton administration, we rejected the balanced budget amendment that was advocated by the same people who have become deficit advocates in the last 3 years for reasons I do understand. On the area of monetary policy, I think that there has been the ECB has been too slow in lowering interest rates. I think they could have done it and still attain the credibility that you talked about. And lowering the interest rate is particularly important now, given the exchange rate problem. And that is one of the outstanding issues, is what growth that we're about to see in the United States, partly at the expense of Japan and Europe. As the exchange rate devalues, U.S. economy will be benefit, but Europe and Japan will be hurt. And the global economy, I think, does not benefit from this kind of exchange rate volatility. Let me turn, actually, though, I have to say that compared to the United States, I do think Europe has been doing well. The United States macro policy represents, in the last 4 years, some real achievements. Let me tick them off. The first is that it's the fastest pace of worsening of a fiscal deficit, a fiscal situation probably ever. Martin probably keeps the historical statistics, but going from a 2% surplus to a 5% deficit and getting worse. We've heard the optimism before about the growing out of the deficit. Reagan talked about it. We had a 6% deficit. 12 years later, it was a 5% deficit. The second thing is, I mentioned before, it is important in a recession to stimulate the economy. We've managed to minimize rather than maximize the bang for the buck. So we've gotten the least stimulation for the deficit that we've managed. And that goes to another problem that's not part of the global problem, but I think is part of the American problem. It's been a very inequitable tax cut. Benefits going to high-income Americans. Much of it has not been spent, not been translated into investment, as you've mentioned, even though there's been a big dividend tax cut. So the fact is it's been a badly designed deficit for stimulating the economy. Thirdly, it's a structural problem. It's not going to go away when the economy grows. In fact, there are proposals to make permanent some of the tax cuts that have already been put forward. And so the official numbers, which are only 5%, don't reflect the new proposals for further tax cuts and making these existing tax cuts permanent. So the real numbers, and you'll see this from Brookings and CBO, are actually much worse than the official numbers going forward. The fourth thing is that we've managed really at early stages of recovery, we've often talked about a jobless recovery. This is a more jobless recovery than normal. In fact, what's so remarkable is in the third quarter, not only was it almost jobless, the number of hours actually went down. Normally in the recovery, hours go up and then jobs follow. And this is really a quite remarkable. Partly it's to do with the productivity, but in terms of robust economy and a really problem inside of America, I think this is a real challenge. I want to say just a word about the trade situation. A number of people have mentioned that trade has been part of the engine growth. On average, trade increases about twice as fast as GDP. I'm concerned about the continuing process of liberalization, trade negotiation, for two reasons. One, whenever unemployment gets high, and it remains high in the United States, the official numbers are 6%, but really, if you look underneath it, we should have been creating 3 to 4 million new jobs in the last 3 years for the new entrants in the labor force. There were almost 3 million jobs destroyed. The jobs gap is 7 million. Some of these have gone into disability. Some of these have the job situation is so bad they've just dropped out of the labor market. But the fact is, whenever you're in this kind of situation, foreigners get blamed, trade gets blamed. As I mentioned yesterday in one of the talks, the good thing for Japan is that in the 80s, Japan bashing was the fashion. Today it's China. But the underlying problem is not China's exchange rate, or the underlying problem is the twin deficit problem that Martin alluded to in the beginning. Finally, if we're going to get a new, if the trade negotiations are going to continue in a successful way, there has to be meaningful concessions from the U.S. and EU, and particularly on agriculture and the other issues that the developing countries are concerned with. The U.S. and the EU reneged on the promises that they made on Doha in making this a development round. In fact, if you look at closely at what was proposed, the kinds of things that were on the table at Cancun, would certainly have done very little to improve the plight of the developing countries, and in some ways would have made them worse off. I think the talk that one's heard after the failure of Cancun, that really the developing countries are the most likely losers, is actually wrong. An unfair agreement, which is where they were being pushed, is actually worse than no agreement. As important as the WTO is for having a rule of law, stopping the U.S. from putting on the steel tariffs and other elements like that, the fundamental thing is that unless there is a fairer trade agreement, it's going to be very difficult to get another trade agreement.
Thank you very much. It's a great pity that Vice President Cheney isn't a part of this panel, isn't it? There is nobody from the US to answer you, unless John Chambers wishes to take up the cudgel of US fiscal policy, and perhaps wise not to at this stage. You can have an opportunity later. I'd like to take up the issues that Joe has raised in the following way. First, Jean-Claude, if I may ask you, the exchange rate. You have made remarks about it, and you didn't have time really to talk about it earlier, but obviously what is happening with the euro is a worry. It's a worry for the recovery. It's a worry in terms of export competitiveness, and it's a worry, of course, because of volatility. How do you see it? What can we do about it?
It's a matter which, as you know, and as you have said, is very, very touchy, and I will, if you permit me, be very concise. And I will only say that in the present circumstances, we particularly stress stability, and that we are concerned about excessive exchange rates moves. And I will stick to that, if you permit me.
Mr. Clement, Germany is the world's second largest exporter, highly export-dependent economy. Exports generated much of your growth in the last few years, and now you see this tremendous currency movement. How far do you think that, because it'll reduce the performance of your economy, will actually undermine the whole legitimacy of your reform effort? I mean, there's a political problem here, is there not, more than merely an economic problem, if the currency starts creating real problems? How do you see it?
Yes, it is a problem for the export economy of Germany. We spoke about it sometimes when we came nearer to the dangerous point of the currency and this weakness of the dollar is a problem for us. It is a weakness of the dollar. This is a problem for us. Nobody can say it in another way. And we need, I think, we need a credible commitment of the U.S. to consolidate the public budget sector. That is what we need at first, I think. And we need more flexibility in Asia in reacting of this. Not only Europe can react, and I think Asia, and we speak about China and Japan, must react too. But to say this too, nobody can discuss it away. We need this in the US, we need it in Asia, but we need the reforms in Europe. And we need the reforms, to say it clear, we need the reforms in Germany. We must bring new dynamism into the economic development in Europe. We must bring more power in it. And to bring it into the economic development in Europe, we need more investment in Europe. We need more investment in Germany in that what I must not explain, in research and development. We need more. And then after this, when we bring this, in Germany we'll bring 3%. We hope to bring 3% of the GDP until, that's the latest moment, until 2010. We must bring this, not only Germany, but we must bring this in Europe, in all over Europe, and then we will get a problem. And I'm Minister of Economics and Labor and have this problem today. We will bring economic in a very better situation there. Economics development in Europe. I'm convinced of this. But what we will have no problem with the high qualified employees. But we have a problem, and we have no answers, no convincing answers in all our countries for the people that are not high qualified, that are poor qualified. That is a big problem. And we are trying to bring this problem away, but I must say this, I'm optimistic, as you are too. I'm optimistic because of the developing of the world economy. That is very important for Germany, very important for our export. I think this is at this time, at this moment, more important than the currency question. But the currency, that is more important. But the currency question is on the table, and the US must solve it. And I think others, as finance ministers of the G7 and G8 said, other countries, other economies must do what they have to do, not only Europe. But I want to stress this, we in Germany, we in Europe must solve our problems. And we have still some problems. To say a word to Cancun, that is not right. In Cancun, we were prepared to make some steps forward, for the developing countries, for the poorer countries too. But we had no chance. I didn't know why we failed in Cancun. But that is behind us. I think, and yesterday in the evening we spoke about it with some colleagues, I think we can make some steps forward on the agricultural sector in the Doha round this year, and we should do so. But this is a question of the political leaders. We should try to bring it away from the experts. The experts are discussing since many years about this. This is a diplomacy of the experts, but they can't bring it to results. We must bring it to results. And if here would be some more of us, I think that was my feeling yesterday in the evening. We could solve some problems of the agricultural sector here in Davos. Give us 2 days more and we could solve it. But we discuss it since more than 2 or 3 years. That is a problem of our technique, of our diplomatic and political technique, and we must change this.
If I were very unkind, I would ask Mr. Mayor what he thinks on this topic. And I am unkind, so please. Do you want to respond on trade and agriculture at all, Mr. Mayor?
The trade, it's clear that Zolek has reopened the door for further discussions this year. When you look at his letter, there is some good movement. And he forgets to address some of the subject. But basically, this is a good demonstration of our willingness in the North not to lose time or save time, because clearly this trade problem, as Mr. Clement has mentioned, is an important one, not only from an economic point of view, but from a psychological point of view. If we cannot convince the South that our system, common system, is the least worst one, we shall create tensions in the south and also in the north. And this will be counterproductive for the potentiality of our system. So I fully support the idea that we need to be more bolder around this subject, including for the farm business. It is clear that it's very easy for Clement and for myself to say the problem is simple, because as you know, we are neither nor Minister of Agriculture, nor in Europe, nor in USA. And as you know, the subject, for unobvious reason, has taken relatively significant size in our both continents, because it's not a European problem, as you know, as everybody knows. It's a northern problem for a reason it's unnecessary to remember. So, but the main reason being that Europe comes from the farm, and US too. This is the reason. 100 years ago, we were farmers. And this is normal, explainable, that the farmers remaining with 1%, 2% or 3% of the active population represents more than their own weight. But having said that, I think that as far as trade is concerned, we shall demonstrate to ourselves that we can reopen positively the door of the discussions. And I hope so, because I think it's very important from a psychological point of view on a worldwide basis. As far as current account deficit and so on, Mr. Chavez cannot speak for USA. It's normal. And I'm very interesting to discover that as soon as the American problem are to be discussed and compared with others, America is not represented by civil servants or by politicians, just by businessmen. It's amusing. Look at the situation in Europe.
The point is noted, I think.
The point is noted.
And understood.
But below that, when you look at the situation in Europe, our way of trying to prepare sustainable growth and to discover that trying to do at the same time something reasonable for the long term and the best on the short term leads to the conclusion that the short-term performance are not very good. Nobody denies that. Reversely, to inject 6%, 7% within 2 years in the business, as it has been decided and will be followed by the same behavior in 2005 in USA for obvious electoral political reasons, is a total different way. I cannot imagine that it is sustainable. Nobody can imagine that. But the problem is the definition of sustainability. Do you think on a 10 years or 20 years basis, in that case everybody can agree, including Americans, it is unsustainable on a 20 years basis. But if you think, okay, do you think that it's possible to have such a situation for the next 3 or 4 years? Then we shall divide, then we shall reduce. But please, the next 3 or 4 years are nothing vis-à-vis the long-term, and it is right, the long-term life of any country or any area. And in that case, the American answer is, look, on the long term it's totally unsustainable, but on the short term, and my definition of short term is 3 to 5 years, it is sustainable. So nobody has the truth. It's clear that as the demonstration brought by America is very positive for us because we enjoy indirectly some part of the plus coming from this growth. But reversely, everybody knows that you cannot increase day after day the indebtedness of your country without consequences. What is behind that? My currency is your problem, as the normal joke in USA. This is just the result of the 60 years we have we have discussed with Mr. Cheney.
Monsieur Mayor, we'll have to go on.
Martin, can I take
Do you mind, just you'll get opportunities later to come back on this, and I think the point has been made very potently. John, very quickly, Mr. Clement, very quickly, and then I want to go to the floor.
Okay. I think one thing that is different in this economic challenge is the speed of change. During the last 50 years, the speed of change that would occur in a country or an industry, and let's use the U.S. with IBM as an example, their decline went on over 2 decades before Gerstner and Palmisano turned it around, and yet they were able to come back. The changes happen so fast today because of productivity and changes that would take place in, knowledge, that took place in 2 decades can happen in 3 to 4 years. So our decisions suddenly take on a sense of urgency, and let me use an example of Cisco. We are one of the most profitable companies in history. Half of our profitability comes from productivity increases. I'm twice as productive as my nearest large competitor. I will drive my productivity up over the next 5 years by 10 to 15% per year. Last quarter alone, I grew it by 9% sequentially, not year over year, but sequentially. Our top 11 competitors had a market cap, evaluation of their future, of twice ours 4 years ago. Today, I have a market cap of 3 times my top 11 competitors. Those changes would have taken 2 decades before. And this is where I think we've all got to be very careful. We've got to realize in this new global economy, the sense of urgency without overreacting becomes even more important, both for jobs in key industries and understanding the effects of productivity that we have in front of us.
I think what John is saying is that the long run is a year. Never mind the short run being 3 to 5 years. Maybe we're operating in different time periods. Mr. Clement, you'll have a chance.
Oh, no, that was only a question of the Doha round.
We can move on then.
Well, we will not solve it today because let's make another round about this, because I wanted to say some problems seem to be bigger than they are, and whenever I have to speak about on the sector of agriculture, about the issue of export subsidies. I'm not the Minister of Agriculture, but I read about it. We have in Europe, in the EU, we have a budget for agriculture of 48 billion euro. And the export subsidies of this are at 3.7 billion euro. 3.7 billion euro from 48. I can't imagine that this would be a problem we can't solve. And therefore I often ask me, when will we start to solve it? We speak about this problem of the export in Doha. We spoke about it in Cancun, and I fear we would speak about it in Hong Kong and everywhere. But this is it seems to me a very small problem, and we must say when we, and this is a very important problem for the developing countries, and we must solve it, and we can solve it, and we should it a little bit quicker than we used to do.
Would you mind very, very quick, because I really want to go to the audience now.
1 minute.
30 seconds.
Okay. I don't think the Chinese currency situation and yen are any similar. I mean, the Chinese currency has been fixed, firmly fixed to the dollar for nearly 10 years, and it is significantly undervalued. And with undervalued currency, the Chinese economy is overheated. Now, Japanese yen has been floating, and although the economy is recovering, we still have deflation and difficult problems.
To the floor. The gentleman there. Yep. That one. Yep.
First question to Jean-Claude. Jean-Claude, you are passionately defending...
Could you say who you are, please?
Andrei Larionov of Russian Federation.
Fantastic.
This is really optimistic.
What does this mean? Could somebody from the forum tell me what this means? Well, anybody who wants to go skiing? No, time is not over. I'm keeping going. Another 10 minutes.
A wonderful view.
Anyway, we've got a nice view, lots of snow, keep going.
It is sabotaging a very indiscreet question.
Yeah. Right. Okay, Jean-Claude, you were passionately defending the promises that have been made several years ago when euro has been created. That time, the other promises have been made concerning the Growth and Stability Pact. And after that, something happened with those promises. So in this building of this kind of monetary and fiscal arrangements in Europe that have been envisaged a few years ago, now it looks like one pillar has been removed, and you are defending the remaining. You are defending the remaining pillar. How stable will be this building in this case? And if I may ask George on the United States,
No, you have one question.
Where is inflation?
You have one question.
In the United States.
One question per person. Jean-Claude.
Well, what I would say, first of all, is that a concept of a Stability and Growth Pact is absolutely necessary to be the appropriate underpinning of the EMU, Economic and Monetary Union. We don't have only a monetary union, we have an economic and monetary union. And if we had only a monetary union, it won't work. And the criticism coming from, I would say, outside Europe on the basis that we put the cart before the horses, that we have a single currency and we don't have yet a federal government or a federal budget, and that creates a lot of problem, would be something which would be founded. So we have a Stability and Growth Pact precisely to permit the appropriate functioning of the monetary union, economic and monetary union, with the absence of federal budget and federal government. That being said, we had observed the last events, and I can only mention in retrospect that, as you know, the Governing Council of the ECB has deplored the decision which were taken the 25th of November, if I'm not misled. We said that we had backed the position of the Commission. On the most recent events, I can say that the Governing Council considers, as always, the Commission as the guardian of the treaty, and we respect its decision to seek for legal clarity. As far as we are concerned, we would consider that we do not see the need for a change in the treaty. We do not see the need for a change in the secondary legislation in our jargon, namely the pact itself. We back the Commission and perhaps a number of governments in thinking that we can improve the implementation of the Stability and Growth Pact, of the text as it is, and that some progress could be made in a number of areas which have been already mentioned, in particular the structural analysis of the situation and a number of other elements which are in the field of implementation and perhaps could be improved. That's the position of the Governing Council at the very moment.
I've just been told that there's no security problem, this is a technical glitch, you should ignore it, and I'm going to ignore it. This gentleman there, who I've given the mic.
Thank you very much. I'm Pedro Couto from the Ministry of Planning and Finance of Mozambique. I expected that with the challenge of Professor Stiglitz, the panel would change a bit its view into seeing that, well, probably the solution of the sustainability of growth in these countries here are not confined to themselves. But unfortunately, it seems that, well, the panel continues to be locked in itself. It seems that the solution will come within the European Union, United States, Japan, and China. But the question of Professor Stiglitz calling for the issue of trade negotiations in agriculture, I thought that, well, he was calling the attention that, well, there is a world outside this smaller group. And there are efforts, for instance, in Africa, to transform the situation, probably in order to having there another China in the future that will hook the growth from these developed countries, as is happening now between China and Japan.
What's the question?
But, the question is, well, the attitude that I'm seeing in the panel means that outside these countries here, plus China, there is no world, there is no genuine interest of these countries in those places. This is my question. Thank you.
I don't think it's a question. I do feel that Mr. Mayor made very, very clear that they do think that the outside world is very significant. Is there anybody who wants to add to this?
Yeah, I'll take a crack at it.
John, very, very quickly, really quickly.
I think when you look at the education process and the infrastructure that's being put in place, it's not going to be perfect, but it will level the playing field more on a global basis than we've ever seen. The jobs will go where the best educated workforce is. What we're doing here at this forum and the Jordan Education Initiative is an example of that. So I actually am pretty optimistic that what you're talking about will be a global recovery, not one that is based upon the major countries. And I actually see more participation than I've seen before in business in this way.
Okay, Mr. Clement, and then Jean-Claude, very quick.
Let me say that we are convinced that we must solve the problems of agriculture, the problems of the poor developing countries, and we are on speaking terms on this. This is difficult in this year because of elections in the US and others, and we are very in a hurry to do some steps forward. But we are speaking about what I told you. We are speaking about the export, agricultural export, and we are speaking about the market access, the opening of our markets. For example, for the cotton export from the developing countries, we must speak. The cotton market is a problem of the US and a problem of some European states, of Spain and Greece, not of the others. But there are some other issues, sugar and so on. Sugar is a problem, for instance, for my country. But we are on speaking terms to solve this, and we can. I told you we can't solve it. We know we must solve it, and I think we will solve it. But my meaning is, as yours, we should do a little bit quicker than we did in the past months. I think it was a mistake to fail in Cancun. We shouldn't have failed in Cancun. That is my opinion. But we should try it again, and we should try it again this year.
Jean-Claude. Only to say that at the level of central banks, we have intimate cooperation and I would say full confidence, full mutual confidence. We meet very often. We don't meet in this format, if I may. We meet with the colleagues of Nigeria, Brazil, Mexico, India, Thailand, and so forth, and a number of others, and we exchange views in a very, very, I would say, amicable and intimate fashion, and we have the feeling that this is the world.
I just wanted to tell you that we started 10 minutes late, and I'm going to run it 10 minutes late, which means it will end in 7 minutes. This gentleman.
Yeah, Martin, I'm Jeff Moore. I'm concerned that by addressing our issues nation by nation by nation, we're missing a big pattern. And so I have a two-part hypothesis I'd like the panel to react to. The first is to treat the system of the three highest growth economies as one system. The US, China, and India are one system that is using outsourcing as this fundamental productivity creation, that it's not a jobless recovery. It's a massive job creation recovery in that system. And that secondly, Europe has the opportunity to create the exact same dynamic within the expanded European Union between the low-cost economies and whatever, sort of following the Keiretsu model of Japan. I'd like the panel to react to that idea.
Joe, would you like to respond to that idea?
Well, I do think that one needs to look at these things in a broader perspective. I referred to one example of that is that the strengthening of the United States is because the exchange rate may be hurting other countries. On the jobs issue, the fact is, this goes back to my macro pessimism and techno optimism. If you have strong productivity growth, and part of that may be outsourcing, you need a strong macro policy to maintain the United States economy or the European economy at full employment. And the fact is, we have failed in spite of the huge deficits. And I think that is a real testimony to a failure of macroeconomic policy.
Over there, Anatol.
Anatol Kletsky from the Times.
Then you. That'll probably be the last one.
Mr. Clement said the currency problem is on the table and the US must do something to solve it. Mr. Clement, you're a politician. You're supposed to take the world as it is, not as you want to be. It is perfectly clear that the US is not going to solve the currency problem in the short term. Therefore, we've had on this panel a very clear exposition from Mr. Kuroda what the Japanese government is doing in that situation. They are solving, or they are dealing with the currency problem. Why is it that the responses from Japan and Europe are so different, does Mr. Trichet and Mr. Clement think the Japanese are wrong to be spending several $100 billion a year on intervening in the currency markets? Does Mr. Kuroda think the Europeans are wrong to be doing nothing about it?
Perhaps the answer is that the Eurozone doesn't have deflation yet. Mr. Clement, would you like to answer, or Jean-Claude, would you like to respond to the difference between the BOJ and the ECB?
No, if you permit me, I stick to what I said already. I would only mention that it is not only, if I'm not misled, the attitude of the Eurozone. I draw your attention to other members of the G7 countries that were not mentioned in your question, and you could perhaps reflect a little bit on the fact that we are not isolated.
The gentleman over there. Yes, please. Very quickly. Who are you?
Good morning. My name is Richard Werner. I'm an economist. My question is for Monsieur Trichet, who's also been for years member of the Governing Council of the ECB. The question is, why, under the authority of the ECB, did the Bundesbank in 2001 and 2002 reduce the quantity of its net credit creation by record amounts, thereby precipitating the German recession? There's a close correlation with industrial production and other indicators, while the ECB has been claiming that this recession has nothing to do with ECB policies, but alleged structural problems. And also at the same time, you mentioned before that you're backing structural reform, but where in the Maastricht Treaty or ECB statutes does it say that it's the job of the ECB to back structural reform or any other political agenda? Thank you.
First of all, as regards structural reforms, I said very, very clearly, and we have all said very, very clearly, that we had no responsibility in this domain. We have a voice, and we say in this domain and in some others what we think. And perhaps if we can help in explaining from our side to the general people that they would be better off, perhaps it would help Europe embarking in this implementation of structural reforms, which is so important, and there is a consensus on that. The diagnosis, again, is a very, very, very large consensus on this point. And we are in democracies, and perhaps we can help. As regards the question of monetary policy, there is no monetary policy of any national central banks. We have a single monetary policy at the level of the Union, and that is absolutely clear. So even the sense of the question doesn't seem to me understandable. We have a single monetary policy.
Gentleman there.
Yes, thank you. I'm Ernesto Kaiser from Diario El País, Madrid, Spain. I would like to ask Mr. Mayor, Clement and Trichet, what are you expecting of the next G7 meeting, ministerial meeting in Florida, 2 weeks from now?
Question should be...
Monsieur Mayor? Oh, Mr. Clement, go, okay.
I'm expecting a signal to the US and to Asia, as I said. And the Europeans will take the position we spoke about this morning.
Monsieur Mayor?
But we need a signal. We need a signal from the US and from the Asia countries.
Monsieur Mayor, do you want to add on that?
No, just I expect responsible behavior of everybody.
You may hope for it. To expect it is extraordinary. The lady over there, that I think will be the last question.
According to the World Bank,
France, who are you, please? Could you introduce?
Lourdes Casanova in Seattle.
Yes.
I'm teaching about Latin America. So Latin America is struggling to get foreign direct investment. France, in 2002, was the second country in the world to receive most foreign direct investment. Could you please, Monsieur Mayor, share with us the reasons of this success and why this foreign direct investment didn't translate in higher GDP growth?
I'm not sure that the figures you are referring to are significant. You know, yes, we are the second country receiving FDIs after China. But outside of my comment, I think that it is a demonstration that our country in the middle of Europe remains with some attraction. So I hope that I shall be successful to develop this attractiveness.
I think I'm going to have to bring it to a close. I think it's an immense pity we haven't had a representative of the US here, but we have had, I think, a very, very lively discussion, at the end of which you conclude either that the Eurozone has a sound, stable, secure, long-run strategy, or they are unfrighteningly complacent. And I leave that decision to you. Thank you very much.